Minasan, konnichiwa, Zamurai Engineer desu. Let us discuss Chapter 2, Systems Design, Job Order Costing, and we are now in the module number 5 of this Chapter 2. So we have the learning goal, number 5, applying overhead cost to work in process using a predetermined overhead rate. So we already know how to compute POHR or predetermined overhead rate. So let us use this, apply this to work in process. Summary of manufacturing overhead cost flow. So manufacturing overhead is the account name. Work in process, another account name. So T account. This figure, this one and this one are called T account because they are looking like T. And they are actually ledger. No? You can use your ledger in order to practice this. You have to practice this also. To practice writing it down. And instead of this, you have to use also the amounts. Use the amounts written on our previous example from module 1. Use an example to have what? An amount written. For example, indirect materials, 2,500. So put here the 2,500. Indirect labor, 1,800. Other overhead, 3,800. So something like that. So use the actual recording and actual what? Ledger. You need a ledger, or if you don't have a ledger, you have to do or to make your own ledger by using your ball pen and ruler. Okay. So you will notice there are actual and applied. So actual are the after the period happens, you already know the indirect materials. You already know the expenses in indirect labor and other overhead. What about applied? That is your estimated. No? Applied overhead applied to work in process. You can what? You can compute overhead applied to work in process from the manufacturing overhead account name to work in process account name. They are the same. Okay, so job cost sheet, so direct material, direct labor, and overhead applied. If actual and applied manufacturing overhead are not equal, a year-end adjustment is required. Okay, this is just an explanation. You don't need to do it. Okay, but take note that after 1 year, you have to what? To balance the actual and applied. Okay, so excuse me, I will just use the plug. Okay. So my device was lobat. Sorry about that. And let us continue. Another example. Overhead application. Work in process is increased when manufacturing overhead is applied to jobs. So you already noticed this from the previous. So this is the journal entry of this ledger. So this ledger is equal to this journal entry. Okay. So work in process and manufacturing overhead. So you will notice that both of these, the work in process and the manufacturing overhead, are both account names. Okay, let's take a look back. Account name here. You can see here, manufacturing overhead and work in process. They are account name. They have separate what? T account, or they have separate ledger account. Okay, but they are corresponding to each other here. So in overhead, that is what? Right side. In work in process, that is left side. Take a look. Remember, work in process, right side of the T. Okay, this is the T. This is left side. Okay, so if you can see here, work in process, left side. Manufacturing overhead, right side. So debit, left side, credit, right side. That corresponds to the precision in recording this transaction. That's why financial accounting is what? Precision. However, managerial accounting is what? Rather than precision, timeliness. Because we are more on using the estimate rather than the actual value. Okay? We are using the estimate. Because we need to decide right now, right away, before anything could happen. Okay? So another example, accounting for non-manufacturing costs. Non-manufacturing costs are not assigned to individual jobs. Rather, they are expensed in the period incurred, so in the whole period. So in terms usually of hours or days, okay? So an income statement expense non-manufacturing cost as incurred. So that would be reflected in income statement as expenses. No? So how to do it? So there are two examples here that we already looked into in the previous module. So salaries and advertising expenses. So let us put this into our T accounts. So salaries, that is indirect. You can use the indirect here. So salaries, indirect, overhead or non-manufacturing overhead. Advertising also is non-manufacturing cost. So an example, we have summary of goods manufactured cost flow. So work in process and finished good. Okay. So cost of goods manufactured, the amount have to be written here. And then the same amount will balance here, because finished goods, you have to put in the what? Finished goods increase. So it is being made. So that is right side. It is left side because it is already finished goods. The finished goods increase in number. The work in process decrease in number. So right side. This is left side. Take a look. Take a look. Finished goods, left side, because it is increased. Work in process decrease, that is credit. So debit, credit. Okay? So as jobs are completed, the cost of goods manufactured is transferred to finished goods from work in process. Okay? Again, this ends our current module, and try to practice. From journal entry, you have to practice now the ledger entry, the posting, or doing it in the what? T accounts. You don't know what is T accounts? Again, you need more explanation. Please find the T accounts and ledger or posting in our financial accounting. Okay, so please rewatch our lecture videos about posting, about T accounts, about ledger. so that it may help you realize and understand what is this all about. Again, this is Dr. DrEYPEI, teaching engineering for NASO building.